Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a monster week, an all-time high for Bitcoin in Aussie dollars. Now, like all exchanges, it varies a little bit. In the US, we haven't hit an all-time high, and that's around $20,000 mark for most exchanges there. But congratulations to a number of Aussies. I think it even hit 27,000 on one or two exchanges. So look, it's been a long time in the making. Thanks to each and every one of you that has stayed with us through the good times and the bad. Look, particularly our members. Look, we have 1,000 new subscribers a week coming on YouTube at the moment, which is awesome in and of itself. We continue to have a great feed of people coming into our premium services, and over 1,000 of you have been with us since 2017. So we've got 5,000 people in our premium service now. There's different tiers if you weren't aware. We've got the beginner's course, we've got our advanced research, and there's plenty of free stuff, guys. So if you've got friends and family, if you're one of the 1,000 new subscribers this week, head over to the website, nuggetsnews.com.au. Go to Collective Shift, go to that knowledge center, and all that is free. So we're adding to that every single day. There are new units. We want to be your one-stop shop for finance, economics, and crypto education. And like these videos, it all ties together and it helps your journey, your investing process. And hopefully it helps have debates with people like Peter Schiff, where we can try and convince some of these gold bugs that are a little bit stubborn that Bitcoin does have a place in our futures. Plenty of you also mentioned that you like these flash style updates. So look, when big important things happen, I normally do try and jump on live, particularly for members, if not for everyone. And it's very exciting, I know, when we're in a bull market and everything's moving. And that was a pretty accurate prediction, I think. A lot of people have been expecting that pullback, and we'll talk about that more in the technical analysis. Other than that, I've got a little bit of a surprise and some housekeeping for you. So after the video tonight, we've got our final little get-together, that exclusive meetup. So guys, check the group. The details on how to join will be there. And this is the first sneak peek at our Nuggets News HQ in Decentraland. So this will be free. This is going to have so many cool things to do. Don't worry about the colors too much. It's more just the design. We want to go for that Nintendo 64 feel. And when you go inside, we want a sort of education, open plan, hang out with your friends, feel to it. Now, you're going to be able to watch all those tutorials, all the explainers, get a nice quiet spot and learn. We're also going to have a sort of socializing area because we want to get together and have drinks and functions and whatnot. But we want to have the screening room. So when we have a big documentary, for example, we've got the Vitalik Ethereum documentary coming up, we might try and screen events like that in here. We might just play this very Sunday night episode every week. So if you want to get together with your friends and watch it there and have a bit of a chat and whatnot, all those things will be possible. This is going to be very much a community-driven thing for you guys. Now, I do want to mention that we're going to have a launch party, and I think we can only fit around 100 or 200 people in there. So they are going to be, again, a little NFT. We're going to make that very affordable, but it will be limited. We can't have 100,000 people trying to show up. So keep an eye out for those. I'll put a link down below once I've got them. And yeah, let's hope that we can have that in time for Christmas, a bit of a Nuggets News get together and kick it off. So I just cannot wait for that. We've also got a new partner that I want to mention for you guys. So this is traveler.com. And the reason that I'm very happy to be working with them is because one way we can get our economy going again is getting out and about and moving, particularly supporting local, because I know international travel is probably not on the cards just yet, but you can pay with all your favorite cryptos here. If you pay with the Traveler token, you can get up to 40% off. So these guys are very competitive. They've got better rates than the booking.coms and those other travel websites normally. So look, it's really a win-win-win here. You guys get discounts. We get to support the Australian economy. We get to use our crypto. Very cool stuff. Head over and check out the website. And yeah, pretty pleased to be working with Traveler. Alrighty, the final bit of housekeeping here is, I guess, about independent media in general. Now, they've come under fire. some of these agencies have actually declared cyber war on independent media, which is just crazy. So anything that's not in line with the mainstream narrative, so that probably includes some things that I say from time to time, even if they're very much the truth. If it's not the truth in the eyes of the mainstream media, they're judge, jury, and executioner. So just be aware that all our content is always on the decentralized platforms as well. I'll do my best to try and walk that line, but it's going to come a day, I think, where a lot of people are just shut down for the wrong reasons and there's no recourse. Be aware of that. Know how to use the decentralized platforms and support independent media where you can. As I said, we're very thankful for our premium members who do allow us to do what we do, allow us to hire more staff, produce more research, and that's the circle of life at the moment. So thank you very much. Without further ado, let's get into that local news. Now, we start off on a positive here where the cash ban has quietly been shelved. So a little win. So much going on at the moment. I think banning cash was kind of back of the pile, and considering there's been so much cash use during this epidemic in Australia, I think that's one that's made it even harder, which is good news. Our young Australians, unfortunately, 12% of them weren't engaged in work or study in May this year, and that's up from just 8% a year ago. This is a worrying trend we don't want to see continue. We want to be trying to get people into high-paying, high-skilled jobs, but like always, our government's focus is home ownership. So instead of trying to worry about getting people to dip into their super to get on the housing ladder, how about we try and teach people a skill to get a better job and a higher paying job rather than trying to make housing more affordable or keep pushing housing prices up? This is absolutely ridiculous, and it's going to be the biggest thing that comes back and haunts Australia in a few years' time. We're going to have people that have 2 or 3 houses that are on government support because they don't have, there's not enough jobs. And that to me is just, how can they not see this? Maybe they can. Anyway, 1.1 million Aussies are planning on selling their homes soon. And this shows if all the benefits way off, the pauses we've got in our mortgages and other loans, that's all being kicked down the road at the moment. Martin and I spoke about this in detail in our monthly housing update, so I won't give too much away. Head over and check that out if you haven't already. We've had another big iconic Aussie builder declare insolvency. They're going into administration. So there's still a little bit of a tale of two markets at all ends of the spectrum in the industry, where the rich are now able to borrow more money, and there's a lot of people that are going to be forced sellers, or they're going to downgrade or go to the suburbs or whatever reason. And so the rich are about to get a lot richer, like I've been saying is going to happen for years. This is playing out in the New Zealand property market, and lo and behold, the New Zealand Central Bank is so much more honest than any others, including ours, where they're now proposing adding house prices to the central bank mandate and what they're trying to support. So in Australia, it goes without saying that everything they do is trying to support the property market and the banks. New Zealand have actually come out and said we should kind of add that to the list of responsibilities that the central bank has. So crazy. Okay. Qantas Airways CEO caused a massive stir this week when he said that vaccination might be mandatory for travel. So look, he backed away from this afterwards when it caused a bit of a ruckus. But these are the sort of conversations we're going to be having. You're never going to please 100% of people. Some people are just going to refuse to get this no matter what. We've already got questions about its safety. How can we even keep it at these cool temperatures for some of them? So we're so far away from having this and rolling it out to everyone that some people are still expecting things to go back to normal after Christmas and New Year. But guys, this is going to be a long process. So yeah, just you've got to bear with it and make the best of it. Unfortunately for us, our number one trade partner who could really drag us through this and give us a boost back like in the GFC continues to crack down on Aussie goods. So we've got $500 million worth of coal that's just stranded there, 1,000 seafarers, no resolution in sight, 200% tariffs on Aussie wine again this week. This is now an international issue. So if you make China the enemy, China will be the enemy. But the US are now getting involved. So the White House are talking about getting involved with this trade alliance that Australia was just part of and retaliating against China. We are stuck in that rock and a hard place. Going to be interesting to see how Biden treats this compared to Trump. But certainly a lot of headwinds for the Australian economy at a time when we should be doing everything to really do as much trade as we can and please take our exports. I'm not sure if Australia are going to apologise and bend the knee, but plenty of chapters left in that story. In terms of China's economy, they've still got their own massive problems. Corporate debt, the shadow banking system, bailing out the banks. We don't really know what the truth of the matter is ever in China, but lots happening under the surface there as well. AstraZeneca, so one of the vaccine makers, have come out and said that, yes, we do need more studies before we roll this out. So that is good to see. Probably something you don't expect them to say, but like I just mentioned, the timeline is probably a lot longer than people are thinking at the moment. 2 COVID tests a week could win you a freedom pass. These are all the things that we were scared of. Are they going to force the chip to be implanted? 2 tests a week. You've got to have the vaccine to travel. This is just going to cause civil unrest, plain and simple. So I think a lot of these articles are almost just mainstream media testing the waters. Alrighty, British economy shrinks most in 300 years thanks to COVID. I think we've had similar figures thrown around in the past, but it just goes to show you that it's certainly not over in the UK, let alone in Australia. Here are the numbers with the US consistently over 1,000 deaths a day. It's that figure that you really want to look at. It's not so much the cases because testing is just so widespread at the moment. What I did want to mention, though, was how this is starting to affect mental health just as much as the labour market and the jobs numbers. And we're starting to see, I think, a lot of people that want to move to the country, a lot of the time it's for that mental health side of things as well as for the job that you want to get out of the city and you might have to give up, sacrifice. People just really want change at the moment, even if they're going to no job, to have a little bit of downtime. So weekly jobless claims are higher than expected once again. America's food banks are totally overwhelmed right now. We keep hearing this. 14 million people are going to lose those benefits. This is 30 million at risk of eviction on January 1st. So can Biden get that big stimulus package through? Because that probably needs to be, closer to 3 trillion now because of how long it's been delayed. Remember they were talking about the 1 or 2 trillion, 3 months ago, 6 months ago. So this is all just playing catch up for then, let alone what we need to fill that hole going forward as well. Sorry guys, hanky time. Okay, where were we? San Francisco is one of those cities that's voting for a CEO tax to rectify wealth inequality, but it's not going to work. We've already heard the stories of the CEO say, well, I'm just going to move out of San Francisco. And a lot of these jobs are the tech jobs, the digital world, where you can really move anywhere. You don't have to be in San Francisco. So it's kind of 1 step forward, 2 steps back when you're trying to tax the rich who have the ability to move about. Now, the buy now, pay later craze has taken off in America. We know it was already big in Australia. But sorry about Henry in the background there, guys. The buy now, pay later craze has taken off in America, where $20 candies, buying your lollies, where they don't even like getting out the credit card. But all of a sudden, it's this new trend. The afterpays of the world, they're coming out, and people are using it for candy. This shows you the financial position that the US consumer is in. Financial conditions in the US have just fallen to their lowest level on record at 97.9. So less than 99 is already rare. But to add to this, we've got record equity valuation. So this is the topsy-turvy world that we're in. Narrow stock breadth, risk-averse market conditions. People are just going risk on, risk on. And look at these dates. We know that that's the dot-com bubble and back in the GFC. Markets are, they're looking toppy, but when you look at what Biden wants to do and the amount of money that's out there on the sidelines, the bubble can keep getting bigger. More of this work here, tourist-starved Caribbean now. They're the latest ones to try and woo workers over, and this is going to be another trend that continues. Even the individual states that want to offer better tax conditions. Deutsche Bank are weighing this move for 2 days a week remote working, trying to save their overheads, I think it is, the banks this time. I'm not sure if it's so much about letting you work from home or them just trying to save on office space. Government workers' wages have dropped the most on record as well. So even the government workers aren't getting a wage. Normally that's the only, I guess, sector that is safe. And we keep hearing about this K-shaped recovery that's getting worse. You know, the inequality is the rich are going up and getting richer, and unfortunately the majority of people are having to sell assets, downgrade, making less money or move to the country. So even in a pandemic, billionaires are winning, and more people are kind of recognizing this. You know, New York Times, it's getting more coverage. They're all happy, but this is where we start to see, the yellow vest people take to the street as unemployment keeps rising. And we've also got the socialist movement. So look, I try and keep my personal opinions out of all these videos, but we certainly have a younger group of people, or even some older as well, that are going more and more down this mindset of socialism. And I think it does get back to the whole idea that a lot of people have never seen a rainy day at all. They don't know hard times. And the world now, the US economy, is so full of these intangible assets, like I keep talking about, the digital world, the online. And until you have those tangible assets and you realize that it's physical, manual labor, hard work, people coming up with real ideas and building real businesses, that's the backbone of the economy. People need to eat. People need shelter over, people need to travel, infrastructure. So it's those real things that are the backbone of an economy, even if some of these other intangible things have become a lot larger. So rich Americans are increasingly looking for second passports, and when things get bad, they're just going to get out of Dodge. So that's good for them. We've seen an interesting trend in terms of a spike in new businesses, a bit of a doozy as it says here. So a lot of people that are struggling are starting new businesses just out of necessity, and that is very interesting, something that we haven't really seen in the past. Some of these people don't have enough money to even pay wages yet. So yeah, this was an interesting article that did get you thinking. In terms of the oil market, so shale energy, we know that they're heavily indebted. That is kind of collapsing around them at the moment. The oil markets are in OPEC's hands slightly, I would say. But at the same time, don't forget that they're in a lot of trouble. Saudi Aramco, they had that huge IPO. It's costing the kingdom billions at the moment. So they're having to issue more bonds just to pay the interest on the first bonds that they'd promised. And that's where you get yourself in this huge debt, this corporate debt bubble, junk debt, high yield debt, whatever you want to call it, when you don't have the cash flow coming in, when all of a sudden oil's not the $60, $70, $80 that you projected, the rubber hits the road. And the reality check is coming to a lot of businesses in different sectors. Sorry guys, I do push on through even when I'm run down and under the weather. Oh, I've got to tell you what happened at the start of the week as well when I was crooked. Okay, so energy investors, these headlines sort of tell you where sentiment is at the moment. This is where money goes to die, apparently. So, look, that is when, as a contrarian, you want to start to get interested. But one thing we do have to keep in mind is whether it's the millennials or we've now got the boomers, the zillennials, as some of them are calling, there's really a change in the guard of who is fueling the stock market and pushing the different stocks or individual sectors. So we've got the whole renewables and electric cars, and Tesla's just been on fire. I think Elon's the second richest man in the world now, which is nuts to think about. We've got all these ESG themed ETFs, and once people get an ETF, there goes a lot of the research that you used to have to do to pick individual stocks you like. Just point your money at that ETF that's got the nice title or logo of the thing that you want exposure to. Legalized weed, we're going to see more and more of these formerly illegal substances become legal. Once they can be a money maker for a company, then they can become an equity, then they can become an ETF. So it's that circle of life where unfortunately money runs the world. And we did see a big bubble in weed stocks a few years ago. And now we're seeing all the green shoots, pardon the pun, a little bit like the crypto world, where we went through that cycle and now we're seeing a lot of cool companies come out the other side. We continue to see the importance of the decentralized world. When Amazon Web Services goes down, takes out a big chunk of the internet, this is where our Filecoin, our Golem, Storage Seers, all those crypto names that you may have heard of are going to replace, hopefully, this centralized infrastructure to stop this sort of thing happening. Tech stocks trading defies the holiday doldrums in a busy week. Look, we know the story here, guys. As long as people have got money in those Robinhood accounts, they are pouring into them at the moment, into those stocks, and it's all about momentum. Facebook are helping launch this new tech industry lobbying group to battle against the anti-monopoly push. So they're onto a good thing. This is kind of like the big banks fighting anyone that's a bit of a threat to them. Interestingly, Facebook or Libra did get out their crypto this week, and they really had to bend the knee there. So they've basically just launched a US dollar stablecoin, the same as 20 or 30 other companies have. So nothing special there at all. US tech firms can now compensate gig workers with equity under this new SEC proposal. So, look, interesting. If you're an Uber driver, for example, would you be happy to work for equity? This is starting to get closer towards a crypto-like model where you get a token and you want to try and own a piece of the economy or that system early on in case it's successful. So, hey, something a little bit different at least. Now, the Fed's ETF purchases have really changed markets forever. Boy, oh boy, don't we know that? And it's the fact that they didn't even necessarily buy a lot. It was just that they signaled that they would. So the corporate bond buying facilities, they're set to expire, but the legacy lives on. And it's kind of like it's always there in the background. The Fed will never let junk bonds explode or that junk bond ETF blow up. No matter how much I try and sell, if there's not enough liquidity, the Fed will step in and buy. So it's just once again another excuse why it's crony capitalism. The rich can never lose, but the little guy can. Investors are looking past a lot of this chaos, throwing $50 billion at some of these different stocks, mutual funds, biggest weekly inflows since 2016. Any pullbacks are just absorbed by cash, and that's what I keep saying about. I think people just do not realize how much money has been flooded into that system, into the reserves in a lot of instances of the banks and whatnot, but it is waiting to come back in. And we saw that this week once there was a little bit of an all clear, a little bit of an uncertainty that was cleared up. And I think more things can get cleared up, and that's going to mean a lot more money can flood in once they feel really comfortable. What if COVID's completely out of the picture? The Trump-Biden thing is all settled. We get another round of stimulus or handouts. There's a lot of good things that can happen. And even if the businesses aren't making more money and unemployment keeps ticking up, blah, 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 there's no reason why stocks can't keep charging higher. And you just got to accept that it's not right. It doesn't make sense in a traditional world, but it's kind of what's happening these days. That's going to be ultra good for crypto and gold as well. So Wall Street dealers in hedging frenzy get blamed for volatility. So what this is showing here, it's the continual buying of options now, not just stock, by all these Robinhood investors, that the brokers have got to try and hedge these positions. And a lot of the time retail are taking like super risky bets, and so they've got to hedge that with a obscure option. And this does funny things to the market mechanics. And we've got to the point now where there's more options, derivatives being traded than actual shares. And I think I said last week that the tail is wagging the dog. Really, really dangerous for a market that's overvalued and lofty, a market where there's not a lot of liquidity. There's a lot of things that can go wrong very quickly. So that's where the Fed are going to have to step in and rescue everyone again. Morgan Stanley are expecting a correction. Market pressure is necessary to get Congress or the Fed to act. So this is literally what I kept saying over the years, that they hold the powers that be hostage. Okay? They almost want the market to go down 10 or 20% and really scare the Fed, because the Fed know if they let that go on further into a bear market, into a sharper correction where there's more panic and more job losses, it's harder for them to get in front of. So instead of doing the 3 trillion to the rescue, it might be 5 trillion to the rescue. And so the Fed, this is why they're going to step in whenever there's a 5 or 10% correction. Even one nasty day, they roll out someone to get out there and speak things up. And that's how fragile the markets are. So JP Morgan sees a possible 300 billion rebalancing from all these different stock flows. Like I've spoken about, we keep hearing, end of quarter selling. Everyone's got a theory out there, but there's a lot of volume being turned over at the moment. There's an oligopoly in terms of asset management. This researcher says it should be broken up. So BlackRock, Vanguard, you hear these big names. They control the vast majority of it, and it's now posing challenges for corporate governance and competition, concentration of power. Think about all the data they have and the front running of customers. Another example of how corporations have just become bigger than government and the lobbying power. It's just so hard to change this system where everything is kind of against the little guy. Now, Kramer has come out and called this stock market environment the most speculative he's ever seen. Markets are insane. Where's the profit takers? Mad money. Hey, how does this end? Do you guys think that this can just keep going up forever? Do you think it's going to end in that kind of socialism where everyone gets a universal basic income and everyone gets forced to buy stocks to keep it going up? I know that I'm not too keen on staying in that system. I want to try and get out into another system where I'm in control. So, all right, how the Fed have created this ultimate paradox where stocks are at all-time highs, but there's no liquidity and there's soaring realized volatility. Realized volatility means that things are playing out volatile, but the markets are pricing that in or buying protection because they know the Fed will protect them instead. That's kind of how that's working. Monetizing privacy with central bank digital currency. So I think one of the reasons that Janet Yellen has now been brought in, so she's an ex-Fed head, she's now a treasurer. She is used to spending money. She was there for all the QE. There's a big war going on in the bond market as the Treasury rift puts the Fed in play. The big tussle between who is going to spend big first and are you going to buy the bonds. So Janet Yellen is going to be more than happy to spend trillions and trillions of dollars. She's not going to bat an eyelid. And now she's got her mate Jerome Powell at the Fed. She's in government. The Fed are just running the show here. You think they're not going to be talking every day? Compared to the relationship that Trump has on Twitter, kind of abusing Jerome and the Fed. Again, this is another reason why markets are really happy. They kind of know that they're about to get a heap of money. Markets are looking for clues on just how and whether the Fed are going to act, how they're going to adjust their bond buying program. I mean, people are waiting for them to adjust, but they're already doing more than they were at the height of QE3. And just remember, this is the same chairwoman that said we will never see a financial crisis in our lifetimes. This was in 2017, and sure enough, here we are 3 years later, we've got the largest financial crisis of our lifetime. So you cannot make up how polar opposite wrong central bankers are, and consistently. It is scary stuff that she is now the one who's meant to save us all and fix the spending in the US as treasurer. I can guarantee you she's going to double it. Anyway, no one has more US denominated debt coming due in the next 12 months than the US themselves. So they owe $7 trillion in the next 12 months. So they're probably not going to default. Are they going to have to just print that? And this is where the whole Bitcoin, Michael Saylor talking about the amount of money that's being printed in 1 year. This is where it is just going to hit the road and be all over the news. It's not a one-off, guys. This is continually now, okay? It's just never going to stop. This debt. Bitcoin, I'm starting to get more bullish. I hate throwing those figures out there, but when you look at these numbers, I'm really starting to think that Bitcoin can get to 100,000 a lot faster than what most people are thinking. In 2008, foreign investors had more than half of the US Treasury market. Now they own about 35%, lowest levels in a decade. So if you don't understand the bond market, the main thing to get your head around is that if I own a US bond, I'm getting paid back in US dollars. So the reason that foreigners no longer want to own these as much as they used to is because the interest rate is going lower and lower. It's probably going to go negative, but it's the currency that you're getting paid back in. So it's all well and good for the US dollar to say, we're the world reserve currency. You're getting paid back in the best money there is. But now you're getting paid back in US dollars, but we had to print 25% more this year. So you're sitting there looking at a 10 or 30-year bond and thinking, I'm getting diluted 25% every year, and I'm getting a 1% reward on this bond or 0.3%. That just does not make sense at all anymore. And this is the reality of the bond market. It's bigger than the stock market. We're talking $100 trillion. At the moment, 17 trillion of that is negative yielding already. So I just think that all that money is about to rush towards gold and crypto. Happy days if you own some. This is global debt. Same story. It's surging. Everything we just spoke about is not only true for the US, it's for every country around the world. Central banks are now adding liquidity, 0.66% of global GDP every month. These are just astronomical numbers now that we're not even batting an eyelid, that we're adding these trillions on top of each other. In terms of emerging markets, don't forget that they're also in debt. A lot of the time it's to the IMF, and the IMF are going to come in and scoop up all their natural resources. So it goes both ends of the spectrum from the US all the way down to those emerging market countries. In the EU, they've got slightly different problems. They've got this rift that's starting to widen more of a diplomatic war here. So Hungary doesn't necessarily agree to these terms and the budget if Poland doesn't. So, why do they get this? Germany, they're going well, they don't deserve this. They can't just print each of their own currencies. The countries have kind of got to beg for euros and bailouts and extensions, and Greece and Italy. And why would you put up with that? I think one of them is going to probably leave in the next 12 or 24 months. Now, the ECB have been pumping the QE and giving this euro credit market an edge over the US. So once again, you're hearing all these different narratives about how great money printing is, and if only the US would just do more, they'd be so much better off. But debt cancellation, that is a dangerous path. We don't want to talk about defaulting or a debt jubilee, okay? And that is promising you, it's telling you the only thing they're going to do is print more money. So you know the playbook. So decide where to park your wealth. Sweden unexpectedly expand QE by 40%. Once again, we hear these over and over. JP Morgan, so they made $1 billion from trading gold after they paid $1 billion fine for being traitors in the gold market, should we say. I thought Jamie Dimon might have been a little bit out of pocket there, so it's good to hear that he didn't lose anything after that $1 billion fine. Gold did tumble, so this is a 4-month low. A lot of that money that was there for the uncertainty, it left, but we've been expecting gold to have somewhat of a correction and tread water after its massive run. It's a great chance to dollar cost average because it's just setting up for that next leg higher once all this money printing starts. Now, gold is just continuing to do what it's always done for decades. As Lynn Olden says, she'll be on the channel next week. Gold basically trades at the inverse of the real inflation rate, or inflation-adjusted 10-year Treasury rate. And at the moment, it's looking like the Fed and all central bankers are promising that they want a higher inflation in the real economy, but they're going to keep rates at zero. So that's telling you that those real rates are just going to get wider and wider, and that just means that gold is going to be higher and higher. Don't you love it? Now, I know this is the macro section, but I want to throw this in there. For some of you that are still non-Bitcoin believers, but you like the macro stuff, these headlines, you just can't ignore them anymore. Barron's, big money is driving this rally in Bitcoin. Stan Druckenmiller, Paul Tudor Jones. We haven't quite got Ray Dalio over the line yet, but I think he's just about there. Bitcoin loses steam after nearing its all-time high, but it's on track to reach 74,000. Then, the 300,000 figure that's been thrown out there. Now, I speak to some guys in the fund management world, and they're right on board with this. They are very much believers that we are going to these huge figures because they know that their firm is about to put in hundreds of millions of dollars into Bitcoin. But for the small retail investor, they're going to get shaken off. They can't handle that volatility. I wanted to throw this in there as well. So we're starting to see rare video games sell for these high prices. So look, whether it's artwork or NFTs in the crypto world, different things have value to different people as long as there's an element of scarcity. And people are trying to park their wealth in anything now because of how poorly governments are treating fiat currencies. Oh, all right, guys, we are nearly there. We're on the home stretch. Please check out that interview I did with Peter Schiff. You'll love it. You'll get a laugh. Peter basically said you can't live by transacting in crypto. As we know, there's so many people around the world that live on crypto. But look, check that out. It was fantastic to chat with Peter. I did want to give you all a little bit of a sneak peek of one of your favorites because I know you guys love Quant Network. You've been trying to get me to talk about it for ages. So look, the team and I did our deep dive research on it this week. Head over to the Collective Shift platform. It's in Spotlight Reports. We've also got the valuations that are out, gold and silver reports. I think the gold and silver are kind of nearing that level where it's time to start deploying some funds. Maybe we get a bit of a capitulation over Christmas like we've seen in the past in gold, silver and crypto markets. But look, when you have your time off, get in there and do your research, guys. That is why we built this app, Collective Shift. It's all there for you. Dive in, daily snapshots if you're busy, headline analysis, all the research reports, crypto spotlight reports, resources. Get your hands dirty over that festive period and set yourself up because the coming bull market that we're heading into, it's honestly one of the best chances of your lifetime. Where else are you going to get these returns? It doesn't happen in the stock market, and it's not going to keep happening every cycle with crypto. We've probably got this one big cycle left, guys, so make the most of it. And thank you to those people that are giving us this sort of feedback. We're always looking to tweak the platform and make it better, but honestly, the reception has been unreal. And I'm surprised continually how we hear these people that are saying, I've been a follower of the channel for a year, 2 years, 3 years, and I never really wanted to join a paid group, but once I joined, it was way different to what I thought. It was the best thing ever. I can't believe I didn't do it earlier. So, look, that's enough of a shield from me, guys. I promise you that you are going to love our community if you do join us. Australia and Singapore are trialing this paperless blockchain technology for trading. Not on the ASX yet, just yet. Over in China, we had the big news about the 4 billion of the Plus token crypto being seized. Now, I don't think that's going to be sold yet. I reckon it's going to be auctioned off, so don't fear too much. That's an old article anyway. I'm not sure why it got so much attention. The big one that scared people this week was these rumors that the Trump administration or Secretary Mnuchin are going to try and rush through these new regulations, basically not letting people have their own crypto wallets or sending crypto from an exchange to their own wallet, unless it's fully KYC. So you've almost registered every crypto address you've got, which completely goes against privacy. Should you have to write down where every $5, $10, and $20 note that you spend is going and who you're giving it to and their name and their record? It's completely over the top. It's overkill. I hope none of this happens. It's going to get a lot of pushback if it does. And once again, when the market sold off, everyone started to get fearful. This happens every year. China bans Bitcoin, then China banned ICOs, exchanges, and this time it's the US banning custodial wallets. All of them still exist. They're all going to still exist next year. Don't worry. We're in a bull market, guys. Relax and you buy that dip. You dollar cost average in. So Biden is considering Gary Gensler for deputy Treasury Secretary. So he's obviously crypto friendly. That's great. We did see Libra launch their US dollar stablecoin, bit of a non-event now that it's just a US dollar stablecoin. They have teamed up with Bison Trails to launch a bit of a QT protocol to help developers build on top of Libra. So they want it to be a protocol, not just a currency. And they've hired the former officer comptroller of the currency, if I'm pronouncing that right, and central bank expert. So look, they obviously still have got high hopes for this, but I just think they've kind of left it too late. We've got such an interesting dynamic at the moment with all these central bank digital currencies. So US intelligence chief is raising these concerns over the SEC and saying that China's crypto dominance if they get their central bank coin out first. And isn't it funny how they're concerned because they're not first? And in the long shadow, we've got the US is becoming a bit of a mining power once again. So I've been speaking about this for months, how crypto hash rate will become a geopolitical battle. And sure enough, the US want more hash rate. We've got Iran in the mix there, avoiding sanctions. China's the leader. Just such an interesting dynamic. Russia's in there. Unfortunately, one Russian did get hospitalized after the miners set his apartment on fire. So look, these things do get hot, guys. Play it safe out there. On a serious note, though, Russia's Prime Minister has proposed some legal steps to make the crypto markets a little bit more orderly. I think this is a case of, hey, the US doesn't like it, so China, Russia, Iran are going to very much adopt crypto just to frustrate them. And President Xi has asked G20 countries to be open and accommodating to the central bank digital currencies. In other words, hey, it'll be great if you let all your citizens use our digital yuan and we can record everything that they do. But somehow I don't think that is going to happen. Binance has had to ramp up the crackdown on US citizens. So they've given them basically 2 weeks to withdraw all your funds out. If you are a US citizen, be aware of that. And the Chinese sanctioned blockchain project BSN, they've added Polkadot, Oasis, and BitYuan to their network of public blockchains. Once again, I just think they want to run nodes and monitor all activity that everyone is doing. The BIS paper, no surprises here. There's potential to embed regulation into stablecoins. So guess what? The Bank of International Settlements, I think you can all picture the big fella there who's the head. He wants more control. And he wants to have a currency of his own. No surprise, they're a little bit greedy. OECD Tax Director, they're talking about tax standards coming in 2021. Very, very hard to do still when you've got such fragmented tax codes in different countries. And this one I didn't see until now. Privacy coins no more. Apparently, CipherTrace have been able to make a patent this technology that traces Monero transactions. So, hey, I'm interested to see what Fluffy Pony says about this in the Monero community, if that's true or not. dYdX have flagged some plans to go multi-chain in the future. Another DEX that wants to be on Binance Chain and Polkadot as well. XRP, wow, didn't they have a massive rally this week? So, look, one that I was quite happy to trade, but I did not think that this was going to pump so much and have a sustained rally. So, well done, 91% this month. A few fundamental drivers here apparently, unique addresses. I think they've got this airdrop, the Flare airdrop coming, and Ripple have announced they're going to be buying back XRP. So again, I'm not really sure if they're going to be selling it each month, then buying it back. But hey, whatever gets your crypto up 90% in a month, don't complain. They're also cashing out of a third of their stake in MoneyGram. Apparently, this is just profit taking and the relationship's all good. And Brad Garlinghouse has said that Ripple would still thrive even if XRP were declared a security. He's saying that most of their customers are in non-US states and whatnot. I don't agree there. If you have been selling this to US customers all along and it's been a security, I don't think thrive is the word I'd be looking for, Brad. Yearn Finance announces 4 mergers this week. So partnering up with projects that they had similarities with to work together, which I don't really mind. So they've partnered up with Cream. Pickle Finance was another one. Powerpool and Cover was the last one. So this is another insurance play, slightly different to Nexus Mutual. Once again, everyone says, oh, what's that mean for Nexus Mutual? Nexus Mutual have been one of the best performers this year. 600% growth the past 3 months, guys. Don't worry. There's room to have 2 insurance companies in the crypto space. It's all good. Gnosis have come out with their new tokenomics for their DAO, which is very, very cool. This is one that I did a massive write-up on for members a little while ago, saying that it was, I thought, intrinsically undervalued because they had 150,000 Ether and their market cap was less than that they were going to come out with these new tokenomics. Sure enough, here we are. So well done those of you that made a bit of money on that one. Another cool partnership here in the world of data and privacy. So that's Ocean and our friends at the Secret Network. Collaborating on access control and private compute for data tokens. That's a bit of a mouthful. IOTA have teamed up with the Austrian Uni for an Internet of Things project and blockchain research lab. A lot of partnerships with IOTA. Curve Finance have voted to disperse $3 million in fees to governance token holders. So token holders have taken a bit of a beating over recent months. So I am very glad to hear that they're starting to get a bit of a revenue flow there. DeFi indexes aren't as diversified as you think. So there's a few out there. Anthony and I spoke about these in our monthly Ethereum update. You've got the Synthetics SDeFi index. You've got the index Coop, and you've got the other one which escapes me now. We've got the DeFi index on FTX as well. It'll come to me, but basically, guys, these are great products. They're all slightly different, so head over and check out what components are in each one before you invest. So the DAI price lost its peg. It went to $1.30, and that threw out a heap of the different DeFi protocols, and that led to this 88 million worth of liquidations, unfortunately, via Compound. So every week we have a little bit of a doozy at the moment. More of them should be using Chainlink. I just don't understand why this is still happening if you could be using Chainlink. We've got wrapped Filecoin now. So it's coming to DeFi rather than their own chain, which is very, very cool for those of you that are only Ethereum capable users to get access to Filecoin. And Filecoin's already grown bigger than Netflix. It's hit 1 exabyte of storage. That is very, very cool in a very short amount of time. So well done to the guys at Filecoin. The big news this week in the Ethereum world, though, was ETH2 being confirmed for December 1st launch. So this is only a couple of days away now. A lot of big players came in late, like I said. Celsius tipped in 25,000 ETH. We got over the line. A lot of just emotion and euphoria this week. It was great to see a massive milestone. And another theory I had for you guys was that when this all played out, Ethereum Classic was going to start making a lot of noise and say, hey, come over here. Sure enough, they've done a hard fork that's going to restore mining capability with older GPUs. So all those miners that are currently on ETH that can't mine when it goes to proof of stake, a lot of them are going to go to Ethereum Classic. So I think Ethereum Classic is a bit of a speculative play at the moment. The ETH Bitcoin correlation has dropped below 50% for the first time in nearly 3 years. Ethereum is definitely starting to tread its own path, and that makes me very, very happy. What do we have to be careful with? We saw the Bitcoin Cash smaller chain get deliberately attacked by the bigger chain after their hard fork this week. So whether or not anything like that happens between the two Ethereum communities, I think they're on good terms now. But a lot of coins are going to continue to face this attack. And it's something we haven't really seen before, a straight up nefarious attack on one to kill the other. All right, last few bits of Bitcoin news here. So John Lennon's son said that Bitcoin empowers people like never before. And this is just a host of celebrities or pseudo-celebrities that are getting out there and shouting crypto. So Square and the Human Rights Foundation have backed this new open source developer fund to help make Bitcoin better and better, have more devs. Kraken already granted $150,000 to that movement there, so that is fantastic. Binance have topped all-time high trading volume at $37 billion. So look, retail are coming as well as that smart money. Coinbase has already raked in 14 billion in institutional assets since April. We did see them hit, was it top 100 free apps on the App Store. They've announced that they're going to scrap margin trading because I think it's just such a hindrance for them. We see these flash crashes, customer support, they've got all this other stuff going on, so they're scrapping margin trading going forward. And again, they were affected by those AWS, Amazon Web Services outages. So hey, once we have the full DWeb, Web3, all those things that I talk about, that we're going to replace Amazon and Google with Ethereum-based projects, we won't have these sort of issues anymore. And that is very much where I want to be invested coming into 2021. Google searches for Ethereum hit their highest point since February 2018. To be expected with everyone talking about ETH2, I guess. And we did have, this was a very easy to use wallet. So Loopring, Layer 2, private, fast, cheap, user-friendly. This is what we've kind of been waiting for. So get out there and support it and give it a try, guys. It's all free to use. I love these mainstream 9 news headlines. So a leaked Wall Street report, Bitcoin to hit 320,000 next year. If that doesn't create FOMO, I don't know what will. But we've got these big YouTubers, normally non-crypto YouTubers jumping on board. Hey, I invested $100,000 in Bitcoin and Ethereum. We had literally the Queen come out and say that she's all about Bitcoin and she likes blockchain technology. Sorry guys, I'm soldiering on. We're nearly there. I mean, it doesn't get much bigger than the Queen. We've got $19 billion of Tether now. That's not including all the different stable coins as well. So if you think about that figure, you think about how much money is on the sidelines. We've got Bitcoin that's stored on exchanges is dropping. It's down to 2-year lows. And one thing I spoke about, let's see if I've got the tweet here that I wanted. So look, this touches on it. What we saw in the sentiment data does highlight this pretty well. So these small players with a little bit of Bitcoin began selling at 13,500. Then slightly more, they began selling at 15,000. Some of the bigger boys began selling at 18. But what we see with the wallets of the whales, they're still accumulating the whole time. So we've had a little bit of a sell-off. We've had a little bit of a profit taking. That's to be expected. But I think there's a bigger narrative in play that I want to tie together in just a second. So the CME futures overtook OKX, and a little bit worrying that Wall Street is now the largest, and these are futures that aren't backed by real Bitcoins. We don't want that to be where money goes. We want them to go into things that are backed by real Bitcoin. An Australian firm have invested in Bitcoin futures. See, I would rather they invest in real Bitcoins, guys. We don't want those futures. But even so, this was a pretty profound statement from a massive Aussie fund. So these guys have got $100 billion, Pendle Group, and they've come out and said that Bitcoin is a cockroach in a waning bond market. So like I just spoke about at the start of the video, there's 100 trillion bonds. The bond market is dying. That asset class is dying. And these guys are the sort of funds that you're not quite hearing or seeing about yet, but trust me, I see it behind the scenes. They are getting involved in Bitcoin. They're telling you that this is real, it's here to stay. They were wrong. Things have changed. It's a legit asset class, and it is going to be a massive pain in the backside for governments and the bond market, because it could soon be dead as an asset class. That is huge, guys. We've come so far. So yes, I do think we can go to $100,000 Bitcoin next year. Guggenheim's $5 billion macro fund, they've come out and said, we want to put 10% of this net asset value into Grayscale's Bitcoin Trust. Hey, it's just another $500 million that's going into Bitcoin. I think that we are seriously on the precipice of something massive. Van Eck have launched physically backed Bitcoin ETN. That's what we want, physically backed. And tying it all together for you here. So ever since we got to even 10K people were saying, oh, this level is going to be resistance. Then we're getting higher and higher, and a lot of the big traders on Twitter and YouTubers, hey, I cashed out. I'm on tether for now because the chart's too steep. There's a 30 to 40% pullback coming. And alts won't be able to run because this, that, and the other, and smart money's only buying Bitcoin. So once again, a lot of people have got things wrong. There hasn't been a good read of this market. But the smart money has been constant, like I spoke about in Monday's video. Go and watch that flash update if you haven't already, because it's going to be true for the entire bull market. Some of these funding rates on exchanges are still negative, which means there's people that are still shorting. There's more people shorting than buying. And so many people have just missed this move. They were on the sidelines. They were waiting for another dip. They've sold too early. There's all these record amount of stable coins, and now you've got a record fiat. All these people are about to have to chase the market when I think we're about to burst through $20,000. This is just the perfect mix of ingredients, and people doing the wrong thing at the wrong time. These are the PayPal volumes. 26 was a record. Next thing you know, we're at 85 million. Astronomical numbers, guys, of constant demand from these new areas that wasn't there before. So I guess tying it all together, I do really hope that I've been able to help you get a good read on this market, because I have been saying very much things like, I don't think the 96 CME gap is going to get filled. I don't think 10K is going to be resistance. I don't think 13K. I think we're going to slice through these like butter. I don't think we've gone parabolic yet. I just think that this market is going to surprise people, and make sure you've got your ticket to the train. I think we've done really well. I think we've timed the time and place to be more heavy Ethereum and alts really well at the moment. We've had some awesome trades. We've had some great exposure to Bitcoin and ETH as they've moved. And I'm really happy with the way that our research is tied together with our team, with the sentiment that we look at, the on-chain metrics, the TA, our friends Kyle and Troy and the chart guys. It's just fantastic the way things are playing out in the community, and I couldn't be more excited about how things are positioned heading into 2021. I think if you know your stuff, you're positioned well, invested well, whether or not you even trade, there is fortunes to be made. So get yourself in the 10%. Don't be in that 90%. Don't be in the herd that do the wrong thing at the wrong time and get left behind. I'll wrap it up there, guys. Smash that like button. Subscribe if you haven't already. Share these videos around. Check out Collective Shift and the Knowledge Center. And I'll talk to you again soon. Cheers.